Welcome, everybody, and thanks for joining us. We have an outstanding panel today. We're talking about a really important global issue. Definition of global justice problems is, in one view, problems that can't be solved within the boundaries of any one country and involve fundamental issues like fairness and justice. And so that's essentially the problem we're talking about today. The global haven industry is part of that story. We're joined today by an outstanding panel. You have the names. I will let them introduce themselves briefly when they're speaking, but they're renowned experts in their field. In fact, any one of them could hold their separate discussions on this topic and have 2 hours to 2 days to hold forth. But I thought the value of getting us together in this mode was, first of all, this is a kind of kaleidoscope topic where there's a lot of different aspects of it, many different dimensions of the global haven industry. And I just wanted to introduce you to the scope of the problem, really, and to try to recruit you to take an interest in this as an example of something I call investigative economics. Alexander Gershenkron, professor of economic history, who's quite a renowned figure in the field, once defined armchair economics as as something that the eunuchs in the harem do. They see things very closely, they observe from the armchair, but somehow they don't quite grasp the essence of what's going on. And all of the people on this panel today, I think, have shared not only a strong interest in this problem and a lot of expertise, but they've also turned into activists, and they're trying to change history as opposed to just understand it. So I will defer to them as quickly as possible. I do have a brief presentation here that'll give you kind of a framework for thinking about the problem. And this is really a problem that when we started this course about 6 years ago, we thought there were signs of progress. The OECD was progressing on having international tax compacts and on showing more country-by-country reporting. We had the ICAJ had just come out with quite striking investigation called the Panama Papers, which exposed a lot of this behavior. We had in the field of bank regulation, we had a number of major banks that had pleaded guilty to offenses from the 2008 financial crisis. And so, we were all expecting the tax justice movement worldwide and the movement for more transparency to really continue to make progress. The situation 6 years later is quite the opposite. We have more havens than ever, 140 compared to 133 in 2016. We have all kinds of challenges being posed to the efforts by the OECD and other international regulators to crack down on money laundering and tax dodging. And there's a general sense of crisis in Western democracies about the rule of law and the threats posed by dictatorships, many of which have taken advantage of offshore havens to hide their assets. So, this obviously these movements come and go, but this is a long-term kind of commitment, and it just underscores the importance of understanding it. It's not everyone's cup of tea. It's pretty complicated. It's intrinsically multidisciplinary, so you have to know a lot about tax law and a lot about economics, international economics specifically. But that itself will only get you so far, because at some point you'll determine that a lot of this field is really undercover, and the most important business practices we understand are those that are just not anyone knows about until they work inside major corporations or law firms that are specializing in offshoring wealth and reducing taxes on offshore and onshore income and wealth. So this is intrinsically something that economists traditionally have not uh, glommed onto too easily. When I started studying this field back in the 1970s, the global underground economy was virtually unknown. Nobody talked really about tax havens or capital flight or odious debt. Uh, there was very poor measurements of any of these activities. And so the whole awakening of interest in the field is a relatively recent phenomenon. Um, so let me proceed with a few slides here. Thomas, if you could share the screen. So you have disabled participant screen sharing, so I need to have you make me a co-host for this presentation.
Professor, the little green arrow, the upward arrow next to share screen. Um, yeah, that arrow, yeah. And then you click on multiple participants can share. That should be good.
Click on share screen.
Click the green button.
Oh, I got it. Yes. Yeah. Okay. Got it. Okay. All right. How's that?
Very good.
Okay. All right. So as I was saying, if you're familiar with Star Wars, you know about the bar scene in Star Wars, where there are all these different kinds of felons from different backgrounds gathered around the same watering hole. And I like to think of the global haven industry as an example of that, because there's not just tax dodging that's involved in and facilitated by this global network of havens. It's also transnational crime, money laundering, contraband, what I call pirate banking, which involves facilitating capital flight and really bad lending, much of which is stolen. Kleptocracy, which is the activity of bribery and theft of public assets, what we call state capture, especially in the cases like countries like South Africa, but also, in the United States, we see examples of state capture, and the anonymous wealth and debt that are associated with kleptocracy. Hacking democracy is a huge topic involved. We'll have several discussions this term about that are related to that, but that basically involves a kind of state capture, manipulating elections, the kind of manipulation that went on in Kenya 2013 and 2017, and as a kind of warm-up to the Cambridge Analytica intervention in Brexit in the UK, and many subsequent examples. And the challenges that presents to not only to regulators but also to journalists, leading to things like representation without taxation. And finally, a lot of this is leading countries to be what I call submerging markets. They are countries that are not living up to their economic potential. They're rich countries, but their people are much poorer and are in many cases struggling. The conventional language for that is a failed state, but I think that underestimates or emphasizes the role of the international network in facilitating things like remittance extortion, human capital flight, and these other abuses. So quantitatively, this is the reason we think this is a significant global justice problem. And we can actually quantify these pathologies. There are good numbers available for the amount of dirty money in the world economy. We know that there's about $3 trillion offshore of big bills right now, in addition to another trillion or so of crypto. None of that can be attributed ordinarily to or automatically to organized crime, but a substantial fraction of it is in activities that are, not reported for tax authorities. Odious finance. We figure about 5% of the $13 trillion a year of global government spending in developing countries. And for many countries, it's a more important problem than tax dodging. About a third of the offshore wealth, 60 trillion or so, is now from the developing world. And as we'll hear, I think Sam underscored this in his essay. Developing world as a whole is a net creditor of the first world once you take into account these offshore wealth stocks. And we see that odious debt, the lending to countries, and then having the elite in the countries just rip off the debt, is continuing right up to this minute. We're just right now doing stories about Kenya and Zambia that illustrate this. Pirate banking, as I said, more than 60 trillion offshore. It's an enormous amount of revenue lost. All of it's owned by the top 0.1%, so it also contributes to soaring wealth inequality. And the folks that have been facilitating this kind of offshoring are, not in just dodgy third world banks, although that's a problem. Many of them are among the largest banks in the world. We added up the financial crimes committed by the top 22 banks, in the last 2 decades, and it was more than 700 offenses, $350 billion of fines. Nobody went to jail. There's a kind of impunity. I can talk more about the Credit Suisse case. We finally got some progress in terms of getting the federal government to punish Credit Suisse by telling them they can't advise U.S. pension funds, but they were facilitating enormous amounts of tax dodging in the U.S. and elsewhere for the last 30 years. Corporate tax dodging is another whole field. Krishen knows an enormous amount of that, so I won't try to second guess that. Human capital flight, really people flight from developing countries. People there are supplying more than $700 billion a year of remittances, 4 times the total foreign aid budget. That's a critical flow to many countries, and yet we find that it's being effectively taxed by the cartel that operates the systems, quite heavily, and so there's a whole issue about how we handle remittances. I mentioned representation without taxation. All of this comes down to the central role, though, that are played by enablers, because none of this activity is done by people who are growing it at home alone. They're all well advised. In many cases, the largest abuses are very sophisticated law firms and accounting firms involved in this, by the largest banks and hedge funds in the world. So why is this a global justice problem? Well, I've just mentioned, I think the key thing is that it really can't be solved within national borders, and it is critical to a lot of other things. If you had a chance to read the paper that I sent you, it's kind of a new introduction to blood bankers. It talks specifically about, how Argentina and Venezuela and Brazil and the other countries in that book, if you roll forward to today, they're all facing fundamental consequences of events that went on with odious debt way back in the 1970s and 80s. So this is an example of why this is a network and not a problem of individual havens. Tax Justice Network, as John Christensen has been involved with, I've worked with him, has become well known for publishing an annual index of financial havens. And as I mentioned, there's about 140 that are now on the Financial Secrecy Index. But unless you really grasp the facts of life about the network nature of this problem, and if you focus only on individual havens and their characteristics, which are changing by the minute because they're competing with each other, you're going to miss the larger picture. When I was invited to Iceland in the wake of the Panama Papers to sit on a commission, this is one of the charts we came up with, which was, quite disturbing. It found just such a dense network of interrelationships among domestic and foreign financial institutions that they just simply couldn't get to the bottom of it. So what we're talking about are shared facilities that enable these 140 or more havens, financial secrecy, weak regulation, low or no taxation, especially for non-residents, very weak enforcement, and all of them very much in the networks that are operated by the professional enablers, some of whom are the too big to jail banksters. Ironically enough, at the same time, they all are, parasitic on the fact that there is some place that enforces the rule of law, and defends their property rights. So nobody wants to keep their money in Cyprus. Ultimately, they want it to move on. They don't want to park it in a place like Panama. They want it ultimately, in most cases, to have it in a place that has the rule of law they can depend upon. So it is very much like the Star Wars bar scene. Well, I'll show you one example of what we're talking about with networks, and this is an example that John is familiar with. It involves bananas. Everybody eats bananas, so we ought to know the next time that we go to the grocery store, this is what's going on and how this global network is being used by some of the banana exporters. I won't name names, but you probably can guess who they are. And the numbers here are, a little outdated, but the basic patterns have not changed. So you have bananas that are being exported 20 cents a pound from, let's say, Ecuador. Much of that there is a little bit of tax being paid on the exports. Most of it's production and labor costs. But then there is a purchasing network that is owned by the same captive subsidiary of the banana company in the Cayman Islands that is charging 12 cents a pound for the use of its purchasing network. Another subsidiary of the same company is charging for, in Luxembourg, is charged for financial services. In Ireland, there's another subsidiary. Isle of Man's insurance services. Jersey, another charge for management services. Bermuda gets 26 cents a pound for the use of its distribution network. And finally, it ends up in the UK with much of the intermediate profit having been drained off by these subsidiaries at transfer prices that could not possibly be deemed competitive. I mean, in each of these situations, there is no competitor for supplying a distribution network to this particular company in Bermuda. So as the Indian economist said, the invisible hand is a nice theory, but in this case, specifically in the world of international trade, offshoring of profits, the invisible hand is often nowhere to be seen. I have a lot more slides than I can possibly present here. I want to jump to two other examples. There's a lot of mythology about tax havens, and the big ones are left off the key lists. We've had a lot of exposés about this, but we're not really seeming to make a dent in what regulators are willing to do, and that's an important subject for us today. I've been investigating, Panama since the 1980s, and Mossack Fonseca, the source of the Panama leaks, was well known as a laundry law firm back then. Clients included some of these critters. 20 years later, they became a leak source. So it's frustrating to be writing about this over the years and having seen so little activity, so many revelations published without action on the part of the regulators. Again, what I'm talking about doing here is what we call investigative economics, which is a different kind of model than you typically get in academia. And we can have a long discussion about methodology and, but ultimately I like John Tukey's summary. He was a noted statistician at Princeton, which, by the way, tops the list on the U.S. News. But just look at the effing data. Get out of the armchair, go to the field. You can actually ask someone how they feel about something and not regard it as, tainted by the behaviorist objections. And you look for, most importantly, for actual concrete puzzles to solve. Puzzles that, are basically pretty simple as opposed to having puzzles posed for you by models. So I've spent a lot of time investigating these critters and trying to audit the debt in many countries. The other basic thing that I think is very useful is to think about this as a matter of trying to measure, even though it's difficult. Lord Kelvin's statement here that you cannot express it in numbers. Your knowledge is of a meager and unsatisfactory kind. So just the attempt to measure is often very useful discipline, even though the data is imperfect. First venture in this field was to look at why there were so many $100 bills outstanding. Where were they? Well, it turned out to be 85% are offshore in the underground economy. We made an effort with TJN support 2012 to estimate the size of offshore wealth. That had not been done by the academic community. And TJN, to its credit, was very supportive of this effort and has supported it all along. And the numbers are astonishing. I won't go into all the methodology. I'm happy to talk to any of you about how to do this stuff. But the bottom line is we found a lot of it being managed by major banks. International private banking is a huge business and still is. We found a great deal of it pouring out of new wave countries like Russia and China. Russia and China being the number 1 and 2 sources of capital flight in the world in the last decade. It's possible to actually, for developing countries, because the World Bank actually publishes the numbers in a way that they do not for the first world, to get pretty interesting estimates for the volumes of offshore capital flight, and if you make some simplifying assumptions, capitalizing that, making assumptions about how much it's earning, how much is reinvested. For conservative assumptions, you can get quite far. So I'm going to ask Sam to just talk about what struck him about this, because he wrote this excellent summary paper. But is Sam in attendance here?
Yeah, I'm right here.
Okay. So you made some kind remarks about this. What struck you as a newcomer to this field about this analysis?
Well, I can see from reading that this was obviously a problem of a large scale. The numbers were clearly very big throughout the different graphs. But this one, it really made me ask the question: well, what do all these terms mean? It kind of unites a lot of the data that we encounter in the different regional graphs. But what is actually the scope and scale of its effect on a country's economic status, or do people have enough to eat? What does this look like for somebody who's just looking at the situation without a deep knowledge of how the financial industry and how finance shapes a site?
Yeah, I think that's an important question. Well, I mean, one of the things that strikes you, what you're looking at is how much debt do these countries have, official debt, external debt, foreign loans and bonds and other foreign debt, usually dollar denominated, but not always. And then taking into account their official reserves, which is usually deposits that they own, and sometimes they plant with the U.S. Federal Reserve in New York, and then debiting out the reserves and the flight wealth, all of which is offshore. The flight wealth is the big critical influence, because what hasn't been done before is to take into account what we call, the offshore wealth of residents of these countries. So for particular countries like Argentina, I'm hoping Hernan can join us and talk about that case in specifically. But for many developing countries, especially the middle tier ones, Mexico, Venezuela, Brazil, Nigeria, Kenya, this is a major problem. The money is basically left the domestic economy, is parked offshore, or it may be reinvested in the domestic economy, but in the names of offshore companies. That's an important, the round tripping is an important phenomenon in countries like China and Russia specifically. But what you get is essentially the developing country as a whole has lost control of its much of its capital. And this is like 180 degrees from what you would expect from reading the development economists of the 50s, the 60s, Arthur Lewis, Nobel laureate. You know, the capital was supposed to be flowing into poorer countries from the first world who had excess savings. That whole Lewis savings model is overturned once you take into account this underground activity, much of which is driven by politics and the risks involved of investing in these countries. Anyway, let me just close with that. I have a lot more material than we can go into, and maybe there's a need for interest in another session. If you looked at Chapter 3 of the Blood Bankers, there's a case about the Marcos example of odious debt. That's where Marcos basically helped himself to $10 billion of central bank borrowings, most of it from New York banks like Manufacturers Hanover, Chemical Bank, J.P. Morgan, and then sent it off to Switzerland and his cronies. Well, we have now the long-term effects of that. We just had Bong Marcos elected president of the Philippines. And how did he finance his campaign? With the help of this offshore stash. Similarly, we had long-term consequences of this in Russia, 1990s. 150,000 state-owned companies were privatized in the mid-90s under the watchful eye of the IMF and the U.S. government and the World Bank for a grand total of $9.7 billion. And they went to about 50 or 60 people. That is less than the oil company Gazprom got for one subsidiary in 2005. That sort of kleptocratic privatization had a lot to do with the creation of the political turmoil in Russia and the rise of President Putin today. So these things have long-term consequences. By 1996, you had 24 people that essentially had control of Congress. And who did they give their money to? Well, as I've written about, a great deal of Donald Trump's recovery after 2000 was due to this private money from places like Kazakhstan and from Russia. It wasn't so much that Putin was interfering in our elections directly, but without this kind of capital flight from Russia by the oligarchs, and you can name names and go into great detail, I don't think Donald Trump would have been Donald Trump. So today, if you go to Singapore, or you could get into the Freeport, which one friend of mine was able to, you'll find a little bit of a disturbing exhibit. It sort of helps us understand what Putin is all about here. But Singapore is a free port, a haven of a certain kind, and it's basically impervious to this kind of to regulation from the rest of us. So the parting thought is, as a challenge, I mean, as Brecht said, capitalism that's truly radical. I think that's actually the case, and there's a lot of responsibility goes around. Let me introduce John Christensen to take it from here. John is an old friend. He's the founder of Tax Justice Network, spent a long time combating these havens, and he has a couple other cases to share with us.
Thank you, Jim. I hope you can all hear me. Jim, can I share my screen with you guys?
Yes.
Okay, here we go.
You need...
I think it should be there. Do you have it in front of you?
Yes.
Okay, good. Well, I'll get it started. Okay. I'll very quickly introduce myself. As you've just heard, I'm the founder of Tax Justice Network, but I began my career training as an investigating forensic auditor, initially in Britain, but and I'm calling you from London, by the way. I'm based in London now, but I have traveled the world and I did quite a few major investigations, but I'm also an applied economist. I want to add to Jim's earlier joke about economists. My joke about theoretical economists is that they very often know 69 ways of making love, but have never had a partner. When you're an applied economist, you actually work very much more in the kind of down at street level, and I've taken a lot of pride in the fact that most of my work has been applied, and that I've actually worked on real world examples and been out there looking at some really major investigations. And those investigations took me offshore. So for quite a long time, I worked offshore in the British Channel Island of Jersey. I worked for one of the big four accounting firms, Deloitte's, and more of that later. I'll take you through some of my discoveries. What I discovered whilst I went offshore to investigate what I discovered both at Deloitte's, but also for a while I headed the government economic service in Jersey. In fact, for over a decade, I headed the government economic service in Jersey and eventually blew the whistle on what I regarded as a very captured state and a captured judiciary. So that's my background. I'm currently working very extensively on new projects, including the Balanced Economy project, which is looking at monopoly power and concentrations of corporate power and their impact on the wider economy. I won't talk much about some of the other work I'm doing. I don't have time. But I do want to draw your attention to the fact that enablers come in all sorts of shapes and sizes. And the British monarch is one of the key enablers on the planet. The British monarch, of course, is not just the king of queen of United Kingdom. The British monarch is also the head of state of some of the world's leading tax havens, including the British Virgin Islands, Bermuda, Cayman, Anguilla, Guernsey, Gibraltar, the Isle of Man, Jersey, and others. And as head of state is responsible for the appointment of all the key officials in all of those tax havens, including the judiciary in all of those tax havens. And if you follow up on that article at the bottom of that tweet, which I sent out a couple of days ago, you'll go to the blog on the Tax Justice Network site. You'll find a letter I sent to the then Queen quite a few years ago, asking the then Queen to take action as head of state against these tax havens. And you'll also find out that the then Queen took no action whatsoever, which didn't surprise me at all. So what I want to do is very quickly, I'm going to have to gallop along, talk about who the enablers are, what the tools they use are, how do they rationalize their behavior? Because these are professional people, they are very well educated, but in many cases, they're engaging with some of the worst crooks in the world. And finally, and I want to address this in particular, what can be done to change professional cultures? Because Jim rightly, I think, pointed out that we've had all sorts of things which appear to be signaling progress. We've had the Panama Papers leaks, we've had the Paradise Papers leaks, we've had various other leaks, but none of them have really led on to the kind of systemic changes in the rules and regulations that Jim and I and others would like to see happen. And I think part of the reason for that is because the leaks have not been accompanied by clear policy proposals for what can be changed. And certainly when I was at Tax Justice Network, that was our key priority. It was to come forward with very clear policy priorities. So, and for those of you who kind of want a clear look, this is a film that I was involved in. I'm not credited as being a producer, but I certainly was very involved in the production of this film. It was aired in France and Germany, hence the title, The Gangster de Latinos. The English language film is available. You'll have to look for it because HSBC seemed to have put a lot of pressure on YouTube to eradicate all the copies that we put up. But anyway, do have a look at this film, which explores one of the world's major banks and its engagement in extensive money laundering and other criminal activity. Of course, HSBC, originally Hong Kong and Shanghai Banking Corporation, was set up to launder the proceeds of drugs money coming out of the opium trade between British India and China. And that goes back to the 19th century, and they still have drugs money running through their veins. The gatekeepers of capitalism, the accountants, the auditors, the bankers, the company administrators, the lawyers, the non-executive directors and trustees are all supposed to play a part in ensuring that capitalism doesn't go totally criminal on us. But in far too many cases, they have in fact turned into enablers. They have sided with the crooks and undermined the potential of the global economy and global markets to actually deliver to the vast majority of people. In doing this, they utilize, as you can see here from a report by the Senate Committee of Investigations, Permanent Subcommittee on Investigations, they utilize secrecy laws and practices that limit corporate, bank, and financial disclosures. Financial professionals often use offshore tax havens as jurisdictions as a black box to hide assets. And the tools they use include shell companies, discretionary and charitable trusts, bearer shares, flea clauses attached to offshore shell companies, redomiciliation clauses which enable them to disappear from one jurisdiction and immediately appear in another guise, under another name, in another jurisdiction, protected shell companies, nominee directors and shareholders, and multi-jurisdictional structures. And this is what I went offshore in the mid-1980s to investigate. I went offshore to Jersey precisely to investigate all of these things. And I joined a company called Deloitte to do this. More recently, I would suggest to you that cryptocurrencies have become a major tool for money laundering. And as far as I'm concerned, it's not a coincidence that the majority of cryptocurrency mining happens either in China or in Russia. And I'm increasingly suspecting that they're being used as yet another tool for hacking our democracies and undermining our economies. But if you talk to the professions, and I have at great length, I've talked to the Law Society in London, they claim that they have a body of ethics. They are, of course, a self-regulating professional association. They have all the right ethics in their codes of conduct to protect us from that. And lawyers aren't alone in that, in saying that. I've also talked to the Institute of Chartered Accountants of England and Wales, and they say that their body, as a professional body, they require their members to abide by a very clear code of ethics. But when you look at, and this comes out of the Paradise Papers, when you look at the behaviors of financial professionals and legal professionals, it is clear that they have abandoned any pretense of attempting to serve the public interest. In fact, by and large, there is a culture, and I don't think anything has changed since 2016 when Süddeutsche Zeitung led on the Paradise Papers releases. There is a comprehensive culture of simply ignoring the criminal and illicit activities of their clients. And that applies to both the legal and financial sectors. When I went offshore to Jersey to work in Deloitte in the mid-1980s, I had access to all their clients' files, and therefore had access to understanding what all their clients were engaged in. And this is what I found just from the clients that I was looking at during my period of employment at Deloitte. So I looked at over 120 clients, and they were engaged in insider trading, market rigging, avoiding disclosure of conflicts of interest, illicit arms trading, illicit political campaigns, donations, contract kickbacks, bribery, fraudulent invoicing, trade mispricing, evading creditors, and tax evasion. Now, okay, that was back in the 1980s, but nonetheless, the accountants and the lawyers in our team were assiduously avoiding looking at any of this. They paid no attention to what the clients they were doing. They simply set up the offshore trusts and the offshore companies and administered accordingly. So I want to take you through a case study of one of the companies that I was administering whilst working at Deloitte's. It was an offshore, it was a joint venture. It was an oil production platform, just covering one well in the Niger Delta region. And I was administrating a company. I'm not going to disclose the title here that I've given gives you some sense of which company it might have been. I was responsible for administering an offshore company that had been set up to do one thing and one thing alone, and that was to take some of the money from that oil well and disperse it to a variety of offshore companies. So the instruction I had was once a month to issue an invoice to the Nigerian venture for unspecified engineering services. And that invoice was anywhere between $500,000 to $1.5 million. We varied it monthly. So quite a bit of money back in the 1980s. And the money was then paid through to an offshore bank account held in St. Helier, Jersey by Barclays. It then payment paid on to a Swiss bank account in the name of a trust that had been set up in Bermuda. And then the funds were dispersed to a variety of offshore British Virgin Island registered shell companies. Now, this involved a large number of enablers. First of all, you had the managing director, and who was a lawyer, by the way, and the finance director, plus one administrator in the Nigerian subsidiary. So you had three people there: managing director, finance director, and administrator, all of whom had professional status. Then in Jersey, Deloitte's, who were administering it, two senior partners were involved, plus one company administrator. That was me, middle management. The Bermudan Trust, two trustees, both of them partners in a Bermudan law firm, plus one paralegal assistant. Goodness knows how many senior partners and two company administrators were in the BVI subsidiary that was administering those companies. Plus, of course, an unknown number of bankers in Cayman, Jersey, and Switzerland. So in total, we can assume that at least 15 financial and legal professionals were involved month after month, year after year, involved in turning a blind eye to the looting of oil wealth. Because what's almost certain is that the eventual recipients of that money, the people behind those BVI companies, were either senior politicians or senior people within the Nigerian National Oil Company. But who's more guilty? The recipients who were receiving the looted money, or this vast number of almost entirely Western enablers, without whom the looting simply could not have happened. By the way, I'll make sure that Jim has a copy of this PowerPoint, so you don't need to take notes. You'll have a copy of this. But I want to take it further, because behind so many of these vast, particularly tax avoidance schemes, you have very senior lawyers who are responsible for producing what are called legal opinions, particularly around tax avoidance schemes, many of which, and Jolyon Morn, who blogged this particular note, which you have in front of you at the moment, a King's Counsel, he was a Queen's Counsel until last week. Jolyon Morn is a very prominent and senior lawyer, and he said quite rightly that many of the legal opinions he gets coming out of London and, I have to say, New York, are criminal and deceptive. They're criminally fraudulent and they're intended to deceive. But they held up and can often go to court, held up as legal opinions of the highest ranking. I'm going to come to a close by talking a little bit about what I think needs to be done. And one of the things is to make sure that the hiding behind legal privilege to protect lawyers, and also, by the way, to protect accountants, is stripped away from such people, so that they can no longer say that when they're advising their clients and then representing their clients in court, that they cannot talk about their clients' affairs because they have client privilege. Because very often, in my experience, it's been the lawyers and the accountants who have devised the schemes, sold them to their clients, and then protect their clients in court from schemes that they have themselves concocted and put into place. This from the Financial Action Task Force, 2013. And they think that legal professionals and legal professional privilege should enable a legal professional to continue to act for a client who is engaging in criminal activity and or prevent law enforcement from accessing information to enable the client to be protected. That should quite simply be overturned. This from the Financial Action Task Force interpretive note. Lawyers, notaries, other independent legal professionals and accountants acting as independent legal professionals are not required to report suspicious transactions if the relevant information was obtained in circumstances where they are subject to professional secrecy or legal professional privilege. Why is that the case? That needs to be overturned. Why are law enforcers apparently unwilling to take on the enablers? And I find the second part of this thing particularly, I just don't understand it, because they are unlikely to make useful cooperators, informants and or cooperating witnesses. God damn it, these people are helping felons strip away their privileges and make them obliged to become cooperators, informants and or cooperating witnesses. They should be obliged to make suspicious transaction reports when they see clients doing what you saw in the Nigerian case studies. So here are some recommendations for tackling the enablers. Require professional associations to strengthen members' guidelines and enforce those guidelines, because they produce all sorts of wonderful things and do nothing to enforce compliance. At least that's my experience. Restrict professional client privilege to situations involving representation before the court of law, but require full compliance with statutory transaction reporting. Replace all tax-related court verdicts and tax rulings on an online public record as a reputational deterrent, and properly resource investigating and tax authorities and prosecutors to conduct expensive and time-consuming cases against the enablers, because nothing would encourage enablers to comply with suspicious transaction reports more than the fear of maybe occasionally doing some time in prison for enabling their clients. So very quick gallop through. I hope that will throw up some questions from you. If you want to know a little bit more about some of my investigations, some of my work, this documentary film, The Spider's Web, Britain's Second Empire, is available both on YouTube and on Netflix, and I hope some of you will find time to watch it. Jim, over back to you, because I know there's some other great speakers queuing up to...
Great, John, that was terrific. Let me just turn it over to the students and ask if they have any questions for you. And, you know, I mean, I think it's a lot of material to digest, but your experience base is is phenomenal. So, class.
Can you stop the screen share? Yes. Okay, we have.
So do you think like dirty lawyers come disproportionately from elitist schools? And do you think there's something we can do in elitist schools to like make sure that that culture doesn't make these people that like have such disregard for the law?
I mean, absolutely. Great question. And yes, I feel very strongly that you are the people who need to pick up the torch now and carry this forward. At the very least, we can ask lawyers to do no harm, you know, for goodness sake. But I think it's long overdue that we recognize again that lawyers and other professionals are given these professional status not because we as a society think it's important that they protect their clients, but we think that they as lawyers protect their clients and protect public interest at the same time. And it's not their job to act as a shield for their clients when their clients are behaving criminally. And more so, it's definitely not their job to concoct all sorts of criminal tax evasion schemes and notionally dubious tax avoidance schemes, or to put into place elaborate multi-jurisdictional structures which enable their clients to engage in very, very elaborate money laundering. Because going back to that Nigerian case study, there was no question that none of that could be done without a very sophisticated infrastructure of supporting professionals. So yes, the answer to your question for me is emphatically, we now need to pursue the lawyers and the enablers more generally. We need to put the spotlight on them. For too many years, the World Bank and others have kind of rightly wanted to tackle corruption, but wrongly done so by pointing fingers at the countries of the global south and saying, you are the villains here. Whereas in my opinion, in the vast majority of cases, much of the corruption that happens and the corrupt practices that happen in the global south could not happen. Certainly the looting could not happen on the scale that it does without a very, very elaborate infrastructure of professional enablers in the global north.
Great. I mean, that's a terrific topic on its own. Any other questions?
Yeah, hi, my name is Justin. Thank you so much for being here. I had a question about one thing you said sort of at the end, and that's the topic of privilege. I'm wondering how like claims of privilege are sort of dealt with in the international sphere. You know, I know like domestically we have things like the crime fraud exception to privilege claims that can be utilized to sort of get those things out in the open. Is that an often utilized tool by regulators in the international sphere, or are there certain practicalities that make the utilization of those tools impractical?
Yeah, thanks for that question. Look, I think it's both national and international. The Financial Action Task Force, I flagged up their views on my PowerPoint. I think that they need to change their position there. I'm sure that Jim and others have had similar situations where you're kind of investigating a high level, whatever it is, fraud or looting or pillage or whatever out of a particular country. And it goes through these very elaborate cross-border structures. And eventually, during your investigations, you take it to the court of a particular jurisdiction. It might be the British Virgin Islands. And there discover that you have absolutely no support either from the court or from the professional companies involved because they're claiming professional privilege, and therefore block every inquiry about who's behind this company, where are its accounts, etc. It can be incredibly frustrating, and strictly speaking, I would have hoped that lawyers and accountants, recognizing that they should be serving public interest, would recognize it's in the public interest for them to disclose information about a company which is involved in a massive looting. But time and time again, I've run up against brick walls. Most of the other investigators I know have come up against brick walls. It's incredibly frustrating.
I would just mention that that's not exclusive to lawyers. It's also a problem. I'm engaged in an effort to get the police in New York to release their the records of police brutality, and we have found them able to just claim impunity, time and again, and just hang on to these records. So that's a huge problem. It goes beyond law firms and accounting firms. But let me turn now to John. I just want to thank you for that effort. That was terrific. And if you can hang in there, I know it's late in London, but we appreciate the wisdom and the penumbra of respectability here from we weary Americans benefit from. I want to turn this over to David Lighton now quickly. Andreas is in Israel and is with us generously. It's very late there, but David's got another engagement at 5, so if he could just quickly do his presentation.
Hey.
We hear from Khadija in South Africa that she has had, an encounter with the power system in South Africa is being cycled off right now, and so she can't join us. But anyway, David, proceed.
Sounds good. Can you hear me?
Yes.
Can you see my screen?
Yep.
Fantastic. So I'll be very quick. Everybody, thank you so much. Professor Pogge, nice to see you again. I am an entrepreneur. I am working very hard on cross-border payments. And so Jim asked me a little bit to say a little bit about our work and what sort of regulatory issues we confront as operators and entrepreneurs, and kind of what the feedback is on the anti-money laundering sort of regime globally for people trying to start companies in the financial services world. My company, like I said, we move money internationally. We've been doing that for consumers. Now we're doing that for financial institutions. We're backed by the European Union and a number of other financial institutions that you're familiar with. We have a major compliance burden, so I'm excited to share a little bit about that with you. So how did I get started in this topic? Jim asked me to start with this story. When I began my career, I was in the World Bank Group for about 6 years, and my first big client engagement was the government of Haiti after the 2010 earthquake. It was a fantastic learning experience, but my first exposure to the anti-money laundering, problem was when I was in a negotiation between the IMF and the Haiti government, taking notes, and they said, "Listen, guys. You've got about 150,000 bank accounts at the Ministry of Finance. And if you want the latest loan from us, we want to see a single treasury account. That's it. No more 150,000 accounts." So please take a moment and think about why exactly a sovereign needed 150,000 bank accounts if they were doing everything in the proper way. And this is not to pick on Haiti specifically. I think a lot of governments around the world behave badly, but it kind of is a elaboration on Jim's odious debt example. And for the record, I don't think that the Haitians ever agreed to the Treasury single account, but I do think they got the loan anyway. So, fast forward, like if you look at the rules to start to do some of this international money movement, you're talking about, like John said, to connect various legal and regulatory frameworks internationally. And, banks in the US don't like to do business with each other, frankly, let alone with foreign banks. And so we're talking about a very difficult problem. So, to really enter into executing foreign payments, you're talking about reporting to probably 5 or 6 different US regulators, 2, maybe 3 divisions under the Treasury Department, FinCEN and OFAC, the CFPB, FINRA in some cases. and all the state departments of banking. So you all may know that the states have a lot of power in the United States. And so rather than having one sort of federal system to regulate banking, we do certain things federally and we leave a lot of other stuff to the states, which imposes on financial institutions a very kind of arcane framework to comply with the laws and regulations, making it really pretty difficult for innovators to break in and do even good things. So what I would say is, in my time around the merry-go-round here, I've learned a lot about the ways that bad financial behavior gets reported on and what regulators, do and don't do about it. So the term of art for how we file when someone has done something bad is a suspicious activity report. And I think to be quite honest with you, it's something like 2 to 3% of all suspicious activity reports that actually get read by the people at FinCEN. I have only ever filed 1 or 2, but the way I like to think about it is that this is not a very serious way to prevent the anti-money laundering, which is really bad. And it's basically a lot of paper to make financial institutions and regulators feel better about, problems that they may or may not be solving, frankly. So that brings me to the next thought. Okay, we got a lot of alphabet soup. Is it working? Well, I might start by saying it's probably a little bit unfair to pick on the US too much, just like it might be unfair for other reasons to pick on offshore financial centers, because 88% of all trade, of all financial transactions everywhere touch the dollar in some way. So there is a really serious burden put on the US, our banks and our regulators to fight financial crime. That creates advantages for us, obviously, because the dollar has massive network externalities, and we are, watching that play out right now with the strength of our currency. But it also makes it, harder to fight financial crime because there's so much of it, right? So you have a lot of people that simply just can't get their money into the United States, even though they might like to. Despite the fact that 88% of global finance happens in dollars, you have a lot of offshore people with risky sovereigns who can't really park their money here because they can't get it in. So where do they go? Well, they go to institutions, offshore financial centers, where a lot of the time they do very legitimate things. So I'll give you an example. I was looking at a deal to carry some dollars for a Brazilian pension fund that was seeking banking in the Caribbean, in Curacao specifically. And so you'd say, well, why are they doing that? Well, because they're not comfortable with the sovereign risks of keeping the money in Brazil. They don't want to be exposed to the bad rule of law. They don't want to be exposed to the currency risks and all sorts of other stuff. So there's a lot of very legitimate reasons that firms park money offshore. And that just helps to sort of muddy the waters here. So I like to think of the offshore sort of use cases as good and bad, right? And I would say the bad ones tend to be where you got a bank in a place like the BVI or Curacao opening up accounts for holding companies who have, anonymous beneficial owners, and you could have a Russian dolls of holding companies, domiciled in Curacao that's wholly owned by another holding company in Russia that's wholly owned by another one and, somewhere else. And you'd have to go pretty far back to figure out who it belongs to, and you may never figure it out at all. So what happens? The Treasury Department loves to impose these very heavy-handed sanctions, which are, of course, a matter of national security onto certain individuals and in some cases certain governments, but they tend to have a lot of unintended consequences. So I wanted to give the Venezuela example that the Venezuelan state is sanctioned. Venezuelan private persons are not, so they are allowed to do business with the US. But basically, if you're a Venezuelan, you can't get money into the US, even if you're a person, because the banks simply just won't do it. They say, look, this juice isn't worth the squeeze. I'm not going to touch your Venezuelan currency. Thank you very much, but goodbye. So, when we regulate global financial crime and try to do global, law enforcement the way we do, there are a lot of unintended consequences, and people suffer. It leads to financial exclusion, and that doesn't just happen at the individual level, but also at the institutional level. You've got banks that are excluded or de-risked from the sort of US and kind of G7, G20 financial system, driving up the cost of financial services for the people that use those banks, if they can get a bank account at all. So this is another problem. China is a great example. We're working right now with a Chinese institution that simply couldn't get banking services in the United States, despite the fact that they have fabulous, regulatory credentials and had submitted for a Fed exam. No US bank simply wanted to do business with them, citing concerns over, our IP protection and so on and so forth. So the US has, in the last few years, really ratcheted up these sort of other alphabet soup bodies like FIRMA and CFIUS, the Committee on Foreign Investment in the United States, which is, I think, under the Senate, or maybe it's Congress, but we make it pretty difficult for foreign investors to buy, shares in U.S. companies. You could argue that's a good thing. You could argue it's a bad. Quickly in the last minute or two here, I just wanted to give a primer on, what does crypto do for all of this? Are we going to have central bank digital currencies? Are they better? Are they not? Well, central bank digital currencies are interesting and to the extent that they would have a more or less perfect audit trail, which I think would make enforcing the anti-money laundering rules a lot easier, to the extent that you don't have any cash, and you could always know exactly where a payment originated and where it ended. But on the other hand, it raises a lot of really difficult political issues, because the banks are not going to want to give up their business to a retail central bank issue digital currency and just lose trillions of dollars of revenue just because the Fed felt like it. But the point I wanted to make is that using cryptocurrency to pay for stuff, in principle, is not only good or bad, and I think in general makes it easier to follow the audit trail of where the money has been, except in the case of Tornado, which some of you may have heard of. It is a so-called mixer, which scrambles the audit trail for transactions on the Ethereum blockchain. It was used to launder over $7 billion of illicit financial activity, and that's just the laundering. Much more happened in Tornado than 7 billion. But it's raised a lot of tough questions since it's been sanctioned, and the folks from Coinbase have filed a pretty contentious lawsuit arguing that it's not legal or constitutional to sanction open source software. The US statutes say that you got to go after the individuals that have done the bad things, because you're really giving them a pass if you go after the open source software. So it kind of goes to some of these First Amendment topics that I'm sure you guys are a little bit familiar with. Are we going to regulate platforms, or are we going to regulate, the content creators on the platforms? I think that really has to get resolved. So where do we go from here? My basic point of view on the regulatory framework in the US is that it gives more CYA than KYC, cover your ass rather than know your customer. I think that the banks do a lot of window dressing and a lot of things that look good, but I don't think that they're really doing a ton to fight financial crime other than spending money and hiring compliance people. Jim and I were talking earlier today about how dubious it is that national security concerns really play a major role in this stuff. I have a friend who works in the security industry for NATO, and his comment to me is that no one in the building at NATO really even knows what financial crime is. So you have to kind of think about what the motives are for the AML regime we have now. To what extent is it designed by lobbyists for banks and not by people who are serious about enforcement? I wanted to make the point that at the end of the day, the way things are now, it makes it harder for people to innovate privately and solve some of these problems. Banking as a service would be a really good way to solve some of the regulatory compliance problems that plague banks. So what we mean by that is when chartered banks can integrate with third-party APIs that can either offer financial services that the banks don't already offer with better compliance, or enhance their compliance with new reg tech solutions. So on the whole, I just wanted to sum up by saying we really need to update the law and regulation to keep up with technology. It has not kept up with technology, and financial regulators need to get serious about solving this First Amendment and platform issue if we're going to have any progress in the next 10 years. So I will stop there. Thank you, and love to answer any questions.
David, that's terrific. I have a question for you. Isn't it the case that some of these technologies you've been working with could provide solutions to the odious debt problem? For example, if you knew where borrowing was actually ending up and could trace that through, as opposed to.
I think that's right. I mean, if you take a transaction that happens on the Ethereum blockchain or a notional, central bank digital currency transaction, from the very moment that that dollar is minted, you can trace where it has been from wallet address to wallet address, forever, from the beginning of time. So to the extent that you know who the wallets belong to, you'll always know who had the money. The real challenge is knowing who the wallets belong to. And that's a problem that the regulators and lawmakers need to figure out like yesterday.
Questions?
Yeah, so thank you very much. I have one question, which is, I know recently the IRS tried to, at least in the United States, this perhaps doesn't affect other countries, but it affects American taxpayers, which is now you have to report transactions on banking platforms like Venmo and PayPal over $600 if they're marked as for goods and services. However, my concern is, if you mark everything over, every eBay seller who's just selling electronics on an online platform and not necessarily laundering anything, or even if there is laundering, it's in extremely small amounts. If you have to report all of that and the IRS hires people to go through all of that, isn't that muddling the waters for real, multi-billion dollar banks that are money laundering, and frankly distracting from the real issue, which was banks and not individual taxpayers?
Well, I think there's two issues, and I know lots of other people could take a bite from this apple at the seminar today. But the first one is we've got a lot of unrealized tax revenue because the IRS's reach hasn't kept up with technology. And I think Gensler estimated that there's something like $50 billion last year from unreported cryptocurrency gains that could be taxable income, right? So that's shocking. I mean, that's a lot of money that the IRS should have access to. But I don't think it's an anti-money laundering concern, to your point. I mean, the IRS is not in that business. They are just the revenue service. But equally, I would add that, apps like PayPal and the crypto exchanges are forced to have very rigorous anti-money laundering and transaction monitoring. So I wouldn't worry that new rule is taking away from law enforcement specifically. It's not the same dollars.
Other questions?
Yeah, so I know the Ethereum merge is coming soon. So, when we switch from proof of work to proof of stake. So I was wondering if that has any implications for as pertaining to this issue. Because like from my perspective, I don't think it'll affect that much, because it's just, instead of having miners, anybody can become a validator now. So it's not just restricted to people who have access to large amounts of computing power. So I don't know if this shifts the paradigm at all.
Yeah, that's a good question. I mean, no, I don't think it does. I think a lot of wallet addresses on the Ethereum blockchain are still, decentralized, right? In other words, if you open up a wallet on the Ethereum blockchain through Coinbase, they know that it's, Jim Henry or John Christensen. But if you use MetaMask and other anonymized wallet products, no, they're not going to know. So I don't believe the Ethereum merge has any impact on the anti-money laundering. No, I think it just has some advantages for other reasons.
Great. Thank you, David. That was terrific. Just again, a tea tasting and a sample of what the issue, but you've spotlighted a number of issues that we think are kind of fundamental. Essentially, as I hear you, regulators basically need to update their game, and that's a central message. I don't know how we get them to do that, but there seemed to be an alphabet soup of regulators. That's a good lead in to Andreas, who has been very patient with us. He's in Tel Aviv, or where is it?
That's Leah.
Atlanta. Okay.
That's Leah.
So, yes. Andres is a European expert on money laundering and has been arguing that the Europeans have not been living up to their laws. So I'll let him take it from there. But
Can you hear me? Well,
we can. Yep.
okay, good. Listen, first of all, it's a pleasure talking to you. My last name is Frank, sometimes a problem in the US when it's Frank who. But I have an accent, a German accent, then you're right. So, but I talk to you from Israel, where I attend a counterterrorism conference that is where all the Israeli intelligence services are here, Shin Bet, Mossad, and military intelligence. But when you talk to them about money laundering or following the illicit financial flows, you don't get an answer. So here it's close to midnight, or it's midnight. So if I look tired, yes, I am, but I have hopefully get you some sensible statements here. In my first life, I was a banker with Goldman Sachs in New York and HSBC. For the last 25 years, I'm AML CFT expert, anti-money laundering, countering the finance of terror. And I haven't seen any progress in 25 years. I was confirmed recently by the Honorable Secretary of the Treasury, Yellen. She said in a public speech, the US is the best place to hide and launder illicit money. I mean, that's a clear statement, but this statement is true for all democracies. Why does it matter? The world is in crisis. Chaos is the new normal. Corruption is exploding. Democracy and its values are in free fall. Citizens distrust their governments. 2/3 of the world population live in autocracies. Indebtedness of the democracies are exploding. I mean, there's not much room for more debt creation in the democracies. Now, since the turn of the century, the democracies are faced with a hybrid war. That means sabotage, propaganda, misinformation. The aggressors are rogue state actors like Russia, organized crime group, terror groups. They work together. A good example is Hezbollah. Hezbollah is a state actor. Hezbollah is a terror group, and Hezbollah is organized crime. They're working with Iran. They are working with Russia, and it's very difficult for us to address these. Go later on in this matter. But I want to just, because Financial Action Task Force was mentioned earlier, I'm working with the Financial Action Task Force unofficially for more than 10 years. And I can tell you the global money watchdog Financial Action Task Force was like other international organizations successfully infiltrated and reshaped by autocracies. From the 37 Financial Action Task Force members, 9 are not democratic. And I can tell you, autocracies have no interest in fighting money laundering or the financing of terror, only if it serves their purpose. I mean, you all know the name Navalny or the democratic movement in Hong Kong. They were all mothballed by the 40 recommendation from the Financial Action Task Force. So here's an institution, they no longer serve the purpose. It was founded by the G7 in 1989. Now, the other things I want to talk to you is Russia and China are autocracies, but they are nuclear powers. Russia has between 7,000 to 40,000 nuclear warheads. It's enough for Putin to go crazy. And for us, the problem is how can we, with conventional military option, try to fight China or Russia? That's very, very limited. Now, I can say, I'm working also with the Italian anti-mafia pool, and they have a very easy way to fight the mafia in Italy. They just claim that there is a suspicion that assets are connected with the mafia, though they can freeze the asset, and under the rule of law, the people of the assets or the beneficial owner can go to court and claim the assets, but they have to verify the money is from illicit forces. Now, we could do the same, because I think nothing speaks against transparency in democracy. We want to know who owns us. So we say we have all beneficial owners have to be positively identified, otherwise the assets are frozen. And the second very important step is that the worldwide multi-billion dollar industry that enables crime by indiscriminately providing obfuscation structures has to be outlawed. And like in war, we have the so-called IFF, identification friend foe. Countries like Switzerland or others that will not comply will be deemed enemy, as we are in a war. People do not understand it. The Ukrainians understand. Now I'm working with the Ukrainian parliament, and they are serious on fighting money laundering. Even the conditions are still very bad. In other words, to NATO, I'm working with NATO for some time, and they agree with me that using anti-money laundering or going after illicit money would be our best weapon in the military arsenal, because it's a weapon, a precision-guided weapon that causes no collateral damages. If you are wrong with freezing money, you can give it back. Money doesn't die, and NATO would like to take it over in its doctrine. The problem here is the member states. They don't like it, and I see all this democracy. They have no interest in fighting money laundering. So I want to leave it here.
Great. Very succinct. Let me ask you one follow-up question. David made the comment about NATO not knowing a damn thing about money laundering. How does that square with it? And he's talking to an insider there, but they don't pretend to have any knowledge about financial crime or, furthermore, key players like Germany in particular, your homeland, is one of the largest recipients of dirty money in the world. Is that not the case?
Oh, absolutely. Our chancellor was involved in, supporting money laundering.
Yeah.
I mean, there was three banks in Hamburg. They were all involved in scandals. There's one Berenberg. They laundered money for the Hezbollah. But on NATO tomorrow, the advisor to Stoltenberg, General Secretary of NATO, will come to the conference. I'm talking to her. That's an Italian girl, Mrs. Berti, Dr. Berti. And we will pick up tomorrow how we can convince the member states to finally get NATO to go after the illicit money. Because this is the place. Financial Action Task Force doesn't work at all. The General Secretary, David Lewis, who left early because he couldn't stand anymore the German president at the Financial Action Task Force, he said to me, we no longer have control over the mutual evaluation process. It's by the member states. And I said before, 9 of the member states are not democratic or autocratic. They have no interest. So it's like FIFA, you can buy votes. So it's all our organization are undermined. So this is the serious problem. We have to rethink our strategy. And the young people that are listening to us, it's their life. They have to fight for democracy, for the rule of law, and for individual rights. It's in NATO's treaty, and it's in the Charter of 1945 from UN. We had a good time after the war, but now it's changing. We are losing the control. And I don't want to live in a dictatorship unless I'm the dictator.
Well said.
Jim, can I just quickly come in on that?
Yes, please.
Agree. This is, I put this to the students as well to address this issue. I talk with national security people here, particularly the Royal United Services Institute, which have and they, for at least the last 15 years, have put money laundering very high up on their international risk matrix. They are deeply frustrated at the lack of attention being paid to this, because they see this as one of the biggest security risks facing the West. So I very much hope that NATO can and will take this on at the highest level, because that is a very, very important part of imposing sanctions on dictators.
I'm in contact with Keating from Russia, from Royal, United Services. They're terrific people, I tell you. There are a few people that understand the problem, and they all have to connect to using it as a weapon.
Students, I hope that woke you up a little bit, but it is late in the Tuesday. But any comments, thoughts?
Yeah, I'm kind of curious if any of you have opinions about how this kind of broad, global financial structure might be tied to longer histories of things like colonialism and extraction. We kind of touched on it briefly in the overall description of the problem in developing countries, but I'm wondering what you guys think of the historical perspective.
Great question. I mean, who wants to take a shot at that? The United States.
Jim, I think it is a very good question. It's a very important question. We have to look at the history of, and I point to my film, the Spider's Web, which the subtitle is Britain's Second Empire. We didn't choose that. We see this as a form of imperialism. It's got to be linked to imperialism, because it's just another way of using power to extract wealth from other countries. And I agree with Yellen's position. The United States is unquestionably the world's #1 money laundering center, but I think the United Kingdom comes in at #2 on the Financial Service Secrecy Index. And none of this is coincidence. I would argue that from 1956 onwards, and 56, of course, is widely recognized by historians as the end of the formal British Empire. The Suez Crisis happened in 56. The empire started to collapse entirely from that point onwards. But a new empire arrived, which was an empire dominated by financial capitalism and the ability to extract the wealth from other countries and to hide that wealth. And Britain, I think, has put that process at the very heart of its development strategy, certainly since the 1980s. So I think the question is good, and it merits a great deal of investigation.
But we got a problem, may I say something here?
Yeah.
I was giving a speech 2 years ago to the parliament in Nairobi, Kenya. And we brought up the stolen asset recovery initiative from World Bank, how much was stolen from Africa. The problem here is we cannot replace one kleptocrat with the other. Who is going to distribute the money?
Mm-hmm. Mm-hmm. Yeah, I mean, I've had that experience in Paraguay where we identified all the foreign assets of General Stroessner on behalf of the subsequent Paraguayan government. They said, thank you very much. And then they proceeded to transfer the recovered assets to their own accounts. So, I mean, the question of colonialism, I think, is a really interesting and important question. And you don't get very far trying to defend the behavior of countries like the United States and the UK with respect to developing countries, especially. And I think I've gone into that in some detail in the new chapter I talked about. But the point at this point is that we are talking about not just capitalism, but we're talking about the rule of law and democracy, and trying to figure out how we organize a coherent defense of all that, rather than just simply say, okay, yes, we plead guilty. Liberal democracy had a lot of sins, a lot of blood on its hands, and now we're out of the game. I don't think that's a good solution either. So at this point, it's kind of like Richard Rorty, the philosopher, talks about in a book called, which I highly recommend, Achieving Our Country. And it is not enough to, for what he called sort of skeptical leftists. The program of the left used to be to have positive proposals for change in the 20s and 30s, and concrete proposals. But simply to be skeptical, cynical, and kind of academic from the sidelines in the situation is not acceptable. We have to realize it's an unfulfilled promise and project that we are about, and at some point we have to defend some values that we have somehow arrived at in the Western countries. Now, we're a bunch of old white guys, no question about it. I can't change that. But I do think it's important when we get together to understand that this is not a north-south issue. This is not a identity issue. It is really fundamentally a kind of class issue, and it cuts across countries. And there's a lot we need to do to aid people at all different, across countries, to build movements around the global problems, the global justice problems that we face, which, again, can't be solved by any one ethnic group or identity group or nation, or much less by dissolving into coalitions of nations. So that's the challenge that we face.
Isn't the basic issue now autocracy against democracy, when it was in the old days left or right, or capitalism against communism? I mean, it's easy now. I mean, you see the development. I mean, 2/3, as I said, of the world population have to live in autocracies and fast moving upwards. So isn't that our fight at the moment?
I think I agree. We certainly have a massive fight on our hands against autocracy. And part of that is to return to the project that was kind of half put in place, but not properly finalized after the last battle against autocracy and fascism. And that was to create a rules-based international order, because you cannot have international flows of capital without some kind of appropriate framework of rules for regulating those flows, and for helping nation states to, amongst other things, tax their citizens effectively. And that's where tax havens have come in, because tax havens represent a full-on assault on that rules-based international order. So we have a task on our hands, not to kind of go back to fortress nation states, but to go back to the attempt to create a rules-based international order, bring all countries into the rules-making process, and fix it for once, not for once and for all, but make a serious attempt to fix it in the interests of peoples across the world. I totally agree with the point that Jim just made. This isn't an issue to do with ethnicity or identity politics. This is essentially a class issue, where a tiny minority, I mean, so small, it's way below 1%, are able to game the system and are now engaged in a full-on attempt to break the rules-based international system. that was put into place to underpin democracy.
You're absolutely right, John. I can only agree.
Thank you.
Well,
We have a case of furious agreement here.
yeah. I mean, I find it personally kind of upsetting that, I've watched Joe Biden over the last, throughout his career. He was not particularly involved in fighting for democracy or opposing the Vietnam War and in the civil rights movement. I never saw him, in the late 60s, early 70s, those of us who were getting arrested or getting in the streets, he didn't show up. He was a lifelong politician. And so lately, it grates on me to hear him talking about democracy as an organizing principle. The center right has been ambiguous about defending democracy when it counted. I mean, places like Chile and, much of Latin America. So it's kind of late in the game, but I don't want to be cynical about it. I'm very interested in what young people are feeling these days about to what extent these issues are, sort of overwhelming or, things that they are concerned about. And, I'd love to hear from the students. Give us a little, cut us a little slack.
You still on?
Yeah, I had a slightly different question, if that's okay, but it's okay. Yeah, I think this maybe is a question about kind of tackling enablers. We talked about the global hidden industry being largely a network structure, but we're also wanting to snuff out bad actors. How do we balance tackling individual enablers while recognizing kind of the interconnectedness of the global tax haven system? I don't know, that seems like a tough balance, right, for when we're formulating regulatory framework, how we balance individual snuffing out versus recognizing the interconnectedness of the system.
That's an important issue. John, do you want to take a shot at that, or?
First of all, my point, I'd like to make the point that it's not a case of either or. We've got to tackle these issues at many levels. Certainly at the international level, getting the right institutions, doing the right things, putting forward rules, and there we find ourselves facing a major problem. I can't tell you how many times I've been into negotiations, either in Brussels, Washington, or Paris with the Organization for Economic Cooperation and Development, and finding myself facing really very powerful lobbies of accounting firms, banks, and so on, who will go to great lengths and spend a great deal of money essentially pursuing their right to help their clients to engage in criminal activities. So I think we've got to work at multiple levels, but we've got to start the process of getting the professionals back on the side of public interest. I know from personal experience that the fee income you can get from working on the wrong side of the equation is massively higher than kind of the fee incomes you can gain from serving public interest. And that is an issue, but eventually all of us have to decide whether or not we want to make ourselves very rich from doing the wrong things, or whether we want to perhaps lead a more modest life and do the right things. And that's a personal choice. But I think that if we don't get the rules right around professional behaviors, that is the enablers, will continue to undermine whatever rules we put into place. And that was starkly said by one accountant who actually said, very unwise, this is a senior partner of a tax accounting business, said rules are rules, but they are there to be broken. Now, this was not an anarchist speaking, this was a financial professional and who had professional status, and that culture has got to go.
Yeah. On that happy note, thank you, everybody. I think that was a good session.